Yo. All right, so let's see if everything is pulled up, ladies and gents, so I can drop this into my Telegram channel. So let's take a look. I haven't streamed in a while, so I gotta make sure that everything is everything. You feel me? Look, somebody just wrote in the chat. Is mic on yet? Yep, here we go. We are live, baby. We are live. It's been a minute. It's been a minute, chat, since we've been on this call. The last one was what? 2 months ago. Since the last time we hopped on the stream. We're definitely about to have a lot of things to talk about today. Let me make sure I put this in my Instagram story as well, just so that they got it. Boom, boom, boom. All right, just drop that on Instagram. What's up, everybody? How's everybody doing? I haven't seen y'all in a long time. Boom, and let's move this over here. This little chat box. Boom. You said the mic is low? Thanks to you, I hit 1,400 as soon as the market opened today. Thank you so much. That's what's up, bro. That is what's up. Am I the only person without sound? I'm gonna turn the mic up, but hopefully this don't mess y'all ears up. So hold on. All right, testing. All right. They said the mic is low. It should be fixed now. Y'all should definitely be able to hear me now. So how's my Sunday going? It's going great. Let's take a look. All right, so can y'all hear me? Can y'all hear me good now? Just want to make sure that y'all can hear me. All right. They said the mic is low. I mean, I feel like I can hear well. I just played it on my end, and I feel like I can hear pretty good. Okay, they said much better. All right, perfect. Well, welcome, ladies and gents. For anybody that's brand spanking new, my name is Mike Lido. I've been day trading since 2019. And I like to do these streams just to go over all of my analysis that I'm looking at for the week and to educate you guys pretty much for free, right? So that you guys can take what you have learned and go and implement it inside of the markets, right? So pretty much how these calls work. As you can see, there is a chat box inside of YouTube. If you haven't about anything, definitely feel free to the stream. I'm definitely going to be doing gold for sure, and then outside of that, we might dabble in it. We'll see, because we got a lot to talk about on gold as well. And then I just got a notification that my OBS is disconnected, is reconnecting. Hopefully y'all can hear me. Let's take a look. And then outside of that, okay, sounds like we're good. Can y'all still hear me? Let me know. Drop a 1 in the chat if y'all can still hear me. Let's see. Okay, sounds like we're good. Can y'all still hear me? All right, on my phone, it still shows that y'all can hear me. We got 244 people in here watching, chat. That's what's up. We good. We back on the streaming. We back on doing our analysis. I know, like I told y'all, I I had took a while off of streaming, and then I was traveling going into the new year. So I really wasn't focused as back getting into it. As y'all can see, I dropped a YouTube video last week. So definitely, if you haven't watched that, definitely go ahead and check that out. And then continue to drop new YouTube videos. So let's talk about that really fast. So with that being said, I was thinking about for my next couple YouTube videos, I want y'all input just to see what would y'all like the most. First, I was thinking about doing another account build series. So like starting with like $2,000 and then building that up, and then just filming the day in the life of just building an account. Sort of like the ones that I did previously last year, and then or would y'all just like the purely educational breakdown videos? I've been doing those pretty much recently, just breaking a lot of my trades down, so forth and so on. But y'all let me know, because obviously I already did the trading camp. We did 1.0, and then we did a couple videos with 2.0. But it's like I don't even know what else to put inside the trading camp, because I feel like we covered a lot. So y'all let me know in the comment section just what y'all need help with, because I know a lot of y'all struggle, and I just like to put out content that y'all need, things that are going to absolutely help y'all inside of y'all trading journey. So y'all let me know what y'all would like to see. Somebody said, can we hear you, it's just your voice isn't as projected, so you may have to turn it up louder than normal. Okay. Account build. Can we get access to the PDF file? Which PDF file are you talking about? A lot of y'all saying account build. Okay. Account build vlog style. Okay. So it sounds like y'all want an account build, which is cool, because I was already thinking about doing that. Account and breakdown live trades walkthrough. Your psychology videos are awesome. Thank you. Let's flip 2K. Start with less money. Y'all want me to start with less money than 2K? I feel like 2K is a decent amount. Then explain why you enter the trade, improve people's skill set the most. Trade breakdowns. Help with entry signals to collect the full continuation move. Trade breakdown. Psychology. Trade breakdown. The one you use for the account build to help with the lot size. It's inside of the blueprint. It's inside of the for those that want it. 2K is good. Breakdown using the Fibonacci and knowing the pullback levels. Like some of those stuff like Fibonacci and stuff like that, I've already made videos on videos with like doing Fibonacci. So that's something you got to scroll back to the trading camp, and then if you go watch like the old videos, like way back when, like I'm gonna actually just pull it up for y'all so y'all can see, because I put a lot. Damn, why do we keep saying get disconnected? But trading camp, so Fibonacci inside the trading camp, it covers everything. And then if you scroll all the way down, you can see where I did Fibonacci again. So go back to this Fibonacci video, even though it's kind of cringe, low key. Like when I go back and watch all my old videos, I'm like, damn, that's cringe as hell. But it was 4 years ago, but obviously it's still Fibonacci. I still use it the exact same way. Same thing with market structure. Like I put out market structure video 5 years ago, and it's still the same concept, right? It's still the exact same thing, same exact concepts. So definitely, if y'all haven't watched those, go back, just binge watch everything, to be honest, because that'll be the most beneficial for y'all, for those that's like asking about like stuff like Fibonacci and stuff like that. But a lot of y'all say do an account build, so I'll do it like that. But I'm gonna try to think about the overall style of it, right? So when I do the account build, so let me ask y'all this too. when I do the account build, would y'all prefer the video aspect to be from the screen? Like, you know how we sitting on the stream right now and y'all can see my face and then I'm breaking down the charts? Or would y'all like the account build to be like this style where I had the vlog and I was pretty much talking about what I was looking for from a vlog standpoint? So I'm gonna show y'all what I mean. So like here, I was pretty much explaining like what I'm looking for, and then I was showing the charts from this perspective of like just holding the camera. So y'all let me know how y'all kind of want it, because like I said, I just want to create the best experience for y'all. You say on screen, vlog and more psychology screen. It's in your group. I'm only in the free Telegram. No, it's on Blueprint community. Yeah, but go live when you do it. Okay, then jump to like a vlog style kind of thing. Okay, cause like this style, this is the way I used to do them like last year, but recently a lot of my trade breakdowns been like this, where I break like this is just a screen recording of like my screen. So y'all say, a lot of y'all saying that y'all want it on the screen. So I'll pretty much do it like this, and then we'll kind of, it's just same like the same way as the live stream. So we'll do it like that, and then that way, it's easy, and I can record that from my laptop as well. So that's perfect. But all right, enough of that. Thank y'all for the feedback. But now we'll go ahead and jump into the charts, and then we will go. I'll answer any questions that y'all have going forward. So let me change these candlesticks back to blue and orange so it's a little bit easier for y'all to see. And then let's make this, let's see how this looks. Hopefully y'all can see the screen. Hopefully y'all can see the charts well. Because I know sometimes y'all be saying that it be small, but I'm trying to figure out how I used to have it so that y'all could see the screen clearly. But let's just go to 100%. We'll just leave it at default. Okay, but all right, so let's go ahead and dive into gold. Obviously, gold has been doing a lot of crazy things lately. If you've been following gold, then you know like gold has been moving absolutely nuts lately, right? Like it's been doing crazy numbers, crazy amount of pips, like stuff that I've never seen to this day in my lifetime, which is crazy because you'll have days where gold literally moves like 3,000 pips, 2,000 pips in a day, and it's like that's low-key crazy. So I'm about to clear off this chart, and then we can pretty much start from scratch. So let's just clear all of this off before I look to take any positions inside of the market, right? So me doing my analysis from the top down allows me to see what the overall bigger picture is. What is the overall story that the market is telling me? Without me knowing the overall story, then I can't just, come up with a bias without seeing the bigger picture, right? It's like trying to tell somebody what the book is about and you've only read, 3 or 4 words in the book. If you only read 3 or 4 words inside of the book, you can never tell somebody completely what the whole book is about. You will have to read the whole book or majority of the book to get that level of understanding, right? So here on the monthly time frame on gold, as we can see, we had this impulse, we had this correction, we had this continuation. The last highs that we took out on a monthly time frame are pretty much stemming from this area right here, right? So these were like the last major highs on our monthly time frame that we took out. So I'm going to mark that area just so that I'm aware of it. Even though we're nowhere near this area anymore because we've been having this huge aggressive push up, this is still data that I want to pay attention to so that I can get an understanding of what's happening on all of the, like I said, all of the time frames, right? Now, coming to my weekly time frame, I can see a little bit more details. The weekly is kind of telling me the exact same thing as the daily. Of course, like I could try to force a trend line and draw something like this, but it really don't. It's so volatile right now. It's not even no point of even trying to draw anything. Of course, I can illustrate these highs here on the weekly, but I will much rather kind of go down to the daily just to get a little bit better understanding with a little bit more details, right? So let's go down to the daily time frame. My students, y'all know when y'all doing y'all top down analysis and y'all looking at y'all market structure, I like to start from the daily time frame to see what is the overall trend. Like, why is the market flowing in the trend that is flowing? Like, why are we here right now? That's one thing that we want to ask ourselves. What caused us to get here, right? So it's like having self-reflection. Like, what caused me to be here inside of my life? Like, it was a stream of events that caused me to be right here. So same thing inside the market. It's previous data that caused us to be right here. So we can see gold was in this huge uptrend structure, and we can start this uptrend structure from this previous low. So this was like the last little area where price had kind of like a consolidation and then broke out of the consolidation. So what I like to do is I like to mark my highs and my lows, which is just my higher highs, higher lows of my trend. So we can see that we have a high, we have a low, we have a high, higher low, higher high, higher low, higher high, higher low, and then all the way up to where we are currently at. Like I mentioned, I started from the bottom of that trend. So here, as we can see, obviously I don't need these anymore because they kind of far off. So I'm gonna just delete it for clean chart purposes. But we can see that we had this last high on the daily time frame get broken. All right, so this is something that I want to take note of, and I'm gonna mark this area. Right, so this is a daily level of resistance, but this also was a daily breaker structure. So what can I do? I can say that this was my last daily high point, right? So this was a high that previously got broken on my daily time frame. So this is something that I want to pay attention to when I'm marking up my charts. Why? Because remember, if y'all have been paying attention, or if y'all follow me for a while, y'all know that the market moves in 3 phases: impulse, correction, continuation. So if I understand that the market moves in those 3 phases, then I understand that any high or any structure point that gets broken usually should come back to correct before giving us a continuation, or you can just call it a break and a retest. So if I know that these previous highs here got broken with a brand new impulse, there's a high probability chance price is going to correct before giving us another continuation, right? So we see this on every single time frame that we illustrate. So me marking off this daily level is telling me that, all right, this is the last high that got broken. Now I could potentially expect the market to retrace back to this level before giving us another possible continuation. Now the only thing with gold is that gold is so bullish right now that a lot of times that it breaks, previous highs, it hasn't been coming back to retest the highs. It's just kind of been, it'll like break structure like this, where, let me draw that a little straighter. It'll break your level and you would think it'll come back to retest, but then it'll only pull back halfway before continuing because price has been so overall bullish lately. So sometimes you're not going to always get that pullback like you anticipate, but you still want to mark those levels where my highs and my lows are at. So since this is my high, this will tell me if price breaks above this area here, this is another break of structure, right? This is a break of structure to the upside to let us know that the market wants to give us a continuation to continue to go higher. If we break beneath this level, which will be a breaker structure, so I like to just call them breaker structure R's, which is breaker structure reversals, and we can put daily. All right, so this will say that if the market breaks beneath this level here, this will now be an invalidation of this overall uptrend, because anytime we're in an uptrend, if this higher low points gets broken, then we know that the market is now beginning to shift the trends, right? So with that being said, it's like, all right, I want to take note of this level right here. So I see a question inside of the chat said, why didn't I use this previous high here? So that's a good question, but based off of the daily time frame, I want to pay attention to the more definitive highs and definitive lows. This one can be broken down into a smaller time frame, which I was going to break down once I got to my 4-hour time frame, because if I look at my daily structure, I will much rather have my daily structure look like such: impulse, correction, continuation. And then once I get down to my 4-hour structure, I can break this daily structure down into smaller, highs and lows of that overall trend. So I just like to break mine down. Of course, yes, you could argue that, this is a high point, but like I said, I like to break mine down into a smaller time frame structure. Somebody said the sound went out. Can y'all still hear me? All right, I'm gonna stop going over that until y'all tell me y'all can hear me, so y'all don't miss nothing. So you're talking to yourself. Can y'all hear me now? Let me know if y'all can hear me. Okay, cool. All right, so last thing that I was saying was that this, I could mark this off as a high, but like I was mentioning, I will break this down into a smaller time frame structure. So I will have my daily structure like such: impulse, correction, continuation, and then I will break this down into smaller, higher highs and higher lows for my 4-hour time frame. So that's why I don't have this level marked, because it's such a small level. Like, you see how it's only basically 3 candles here, and it's not like a real, not saying it ain't a real structure, but it's not a real definitive pullback for the daily time frame. Like, if you look at all of these daily time frame pullbacks, you can see they have a lot more data with them. Instead, damn, y'all said no sound again. Hold on. Can y'all hear me or can y'all not hear me? Because is it froze? It shouldn't be froze. It don't tell me it's froze. Hold on, let me look on my phone real quick. But still no sound. If you don't have sound, refresh. Okay, so some of y'all can't hear, but some of y'all can. So I don't know what's going on, but like they mentioned, hold on, I'm gonna just put it on the screen. If you can't hear, refresh the stream, refresh the browser. Oops, it's a little too big. All right, if you can't hear, refresh the browser, right? The sound has been good to me the whole time. Sound is good. The video keeps pausing. That's the connection. Exit the live. All right. So yeah, if you can't hear, just refresh your browser, because I'm not sure what's going on. It may be my Wi-Fi, but honestly, I don't know. So we just y'all just let me know, like, if it do go out, then y'all can just stop me again, right? So overall, like I was mentioning though, we should be good to go. And overall, looking at our daily structure, like I was mentioning, impulse, correction, continuation, right? So now, moving on forward from this daily time frame, this was our last high that we previously broke. And then, like I said, this is a daily high as well. So let's just put this last daily high. Last daily high. um, so from this overall area, this is a actual impulse. So we can expect a correction, like I mentioned, and then we can look for another possible continuation. So based off my daily structure, this is where I will put my fib. So this is my last low to my last high, right? This is my point A to my point B. So for my daily structure here, I'm going to put my fib, point A to point B, like such. Currently, right now, as we speak, we are sitting at a 50% fib level. So since we're sitting at a 50% fib level, this is a possible area where we could see price turn around, but we don't have any structure to base it off of, right? So we have to be careful knowing that, you know, there is no structure here based off our daily time frame, because we kind of in the middle of no man's land. What I would like to see is price to trickle down into, you know, previous high points that we could look for a price to bounce off of and act as a level of support, right? So just be mindful of that when you're looking at it from the daily perspective, right? Now, dropping down to our H4, let's make sure that is there any trend lines that I can draw on my daily? Let's take a look. All right. For those that's asking my fib settings, they own the chart. You just got to put in the values. And I made a whole video on it inside Trading Camp for those that's wondering, but they literally right, you know, they right here. So this is how I have them set up. You just got to insert the values. But all right. So daily time frame, I drew this little trend line, but it probably look a little bit better on the H4. But we'll see once we drop down. So now that we drop down from our daily, we can see that we go to our 4-hour time frame. All right, so this is my other dots that I had previously. So let me go and clear this off because this is only applicable to the smaller time frames. And I'm gonna remove this fib real quick just so it's easier. Give me 1 second while I erase all of this stuff. And ultimately, this is what I would have drew once we got to our smaller time frame, but I'm gonna redraw it so y'all can understand the reasoning behind all of it, right? But okay, so putting this daily fib back on here, and this is kind of where when I'm marking up, I like to have like templates for like different time frames. So for this, since this is a daily time frame, I can change the visibility so that on my smaller time frames, it's not like super all over the place. I can set it so that it's only on my 1 hour through my daily, weekly, and monthly time frames, or I can set it to like 4 hour, but I'm gonna just set it to for the 1 hour and above. So if I go to 30-minute, obviously you can see it erases. On my 4 hour, it appears, right? So those are just little templates that you can do when you have your higher time frame structure. Same thing with your dots, same thing with your trend lines, just to keep, you know, things a little bit more organized, and that way it's not like hella shit on the screen, right? But all right, so moving down to our H4 time frame, let's go and look at our structure. So actually, I'm gonna remove this fib just for 1 second. That way, it don't confuse anybody. But all right, so our 4 hour structure, remember, I like to see why are we in the price, why are we in the area that we're in, right? Somebody said they can't hear, refresh your browser. Why are we in the area that we are in? So why is this a trend? Where did this trend originate from? That's the question that you should be asking yourself whenever you're dealing with your structure, right? So whenever you're dealing with your structure on every single time frame, you should be able to say, where did this trend originate from? Obviously, on the 4 hour time frame, we had this uptrend here, you know, forming higher highs and higher lows. Then we had a downtrend. Then we started a new uptrend. Then we had a downtrend, so forth and so on. So I'm going to start my 4 hour structure just for class purposes, I'm going to start my 4-hour structure from this the beginning of this trend here. So I can put my structure points as such. Oops, 4-hour, boom. All right, so we had a low, then we created a higher high, then we created a higher low, then we created, this one is pretty much equal. So we created a higher high, higher low, and then we had a high here, higher low. And then from this area, it's like, this is where like the structure start to get annoying. Once it start giving like these little baby pullbacks, I really don't like to like put those for 4-hour structure. I'd much rather put them for H1. But you could argue that, you know, those are highs and lows. And then both of these fibs already got hit. So let's take a look. Actually, I'm gonna just put this 4-hour high here as such. So impulse, correction, continuation, correction, continuation for my 4-hour structure, right? This will be my 4-hour structure. Now, mind you, yes, you can mark these little highs and lows, but like I said, I will much rather do it on my smaller time frame when I got a little bit more detail. Because right now, these, it don't give me a lot of detail with these highs and these lows. Like, yeah, you can see them, but I still would rather break that down into a smaller time frame structure. That's just my personal opinion. Now, I don't want y'all thinking that, oh, just because I didn't mark it off as 4-hour structure, that your structure is wrong. It's just I prefer mine to be like that, and I like to break my structure down in this particular way versus putting it all on just, you know, one big ass time frame, right? So that's just my personal preference. But as long as you come up with the same highs and same lows, then we pretty much coming up with the overall story, right? So this is what, like I said, I have on my H4. And then coming from this H4, I can look to see if we have a trend line. So when I draw trend lines, the rule of thumb is 2 points, find 2 points, and then drag it into the future. So we got 0.1, 0.2, 0.3, 0.4, drag it into the future. Obviously, price is sitting on this 4-hour trend line right now. So that's data that we want to pay attention to, right? So we need to be aware that price is sitting on a 4-hour trend line, because when we're sitting at critical areas like a 4-hour trend line or a daily trend line or 1-hour trend line, whatever the case may be, those are areas where in the market previously it has reacted, right? So if it's reacted in that area in the past, then there's a high probability chance that the market will react from that area again in the future, right? So obviously we can see we got some wick exhaustion. We can look at this, you know, the details on this on a smaller time frame, but overall, based off where we at, this is, like I said, a 4-hour trend line. And then also I want to pay attention to this 4-hour break of structure level. So this was a previous high that got broken, and we kind of had like a baby retest, but this is pretty much consolidation. So I'd rather see price push away from this area, come back, and then continue, right? So this is an area of interest of mine that I will be looking for gold to possibly, you know, pull back to, because it's previous highs that got broken and never really got retested based off our 4-hour structure, right? So just be aware of that. Now that we have the 4-hour structure, we can go and drop down to our 1-hour structure, right? So our 1-hour structure, we can get pretty much a little bit more detail, right? So this is where we understand our time frames and understand what's our trends on our lower time frames and being able to see the details. So the same way that we were doing our 4-hour and our daily structure, same thing for our 1-hour. So we would ask ourselves where the trend started, and we can see it pretty much started from this last 4-hour continuation level. So I'm going to start my low from here, and I just like to do mine with, you know, I like to color coordinate everything. We had a low. So if you look at this structure, it was a low, lower high, lower low. We broke the previous lower high point here. with a brand new impulse. We had a correction, continuation, correction, continuation, correction, all the way up, right? So this was our 1 hour trend. So what I'm just doing is I'm just marking off where my highs and my lows are at from this overall trend. Boom. And then we had this last little high point right here. Boom. Now this is, like I said, my 1 hour structure. Boom. So this is my 1 hour structure. So now that this was my last 1 hour higher low point, I can see that this was my 1 hour breaker structure. So I can put this as H1. Boom. So with that being said, what that tells us is that from this area, once price broke this level, this was an impulse to the downside. We had a small correction, and then we got a continuation from this area, right? So impulse, correction, continuation, right? So we know that on our 1 hour structure, price is no longer bullish, it's bearish, right? Because why? We had an uptrend structure like such, and then we broke our uptrend structure by breaking our previous higher low point, which was the invalidation of this uptrend. Anytime you break a higher low point in an uptrend, this is a sign that the market is now about to reverse and shift the direction of the trend. So once we broke this level, that's our sign. So remember, the impulse tells you the overall direction the market wants to go. The correction confirms that overall direction. And then the continuation is where we look to make our money, right? So impulse, correction, get money, right? If you've been following the boot camp, then you know that this is how we trade. This is how we view the market, right? So like an analogy that I like to use and that I used inside of the boot camp was I see money, right? So you're able to see the money present itself once the market gives you those particular patterns. So if you have a impulse, which will be here, an impulse, right, tells you the overall direction the market wants to go. A correction confirms that overall direction, right? And then a continuation is where you look to make money. So this will be an I, this will be a C, and then you get money. Impulse, correction, get money, right? And that's just a way that I like to explain it so that you can understand what the market is actually doing and the phases of the market, right? So it's just, like I said, it's just higher highs and higher lows, but a way that you can overall understand it, right? So based off of this area, like I mentioned, we had an impulse, we had a correction, and then there was a possible opportunity to get money, right? Now this is our 1 hour time frame. So we can draw another trend line like such. Every time we drop down the time frame, remember, we want to get closer to price as possible, right? So we want to pretty much box price in and get close to price so that we can know and we can be aware and understand what is about to happen next. Based off of the data that the market is giving me, am I getting an impulse breaker structure? Am I breaking out of this area? Like what is the market, like I said, telling me so that I can prepare myself? Whenever you have your structure illustrated, whenever you have your trend lines illustrated, this is boxing price in, and then this is saying that if price does this, then I'm going to do this. If price does that, then I'm going to do that, right? So when you have your charts marked up, you're able to say, oh, we just had an impulse to the downside, obviously I should be looking for sales. Or we had an impulse to the upside, obviously I should be looking for buys. Now where most people get construed is they think that, oh, I just had an impulse, like I broke a high point, that means that the market is about to reverse. It doesn't necessarily mean that if your structure is off. And that's why I take the time to illustrate my structure to really know, okay, what's about to happen next based off of the structure, not just price breaking highs. Like, so what I mean by that is, you see how this was our last higher low point on H1. Up until this point where this got broken, this was still bullish. Even though like I could have broken a low, I could have broken a low up here. That don't mean that the trend is invalidated. It just means that it broke a low within the structure points. So it's ultimately just noise when you break lows or highs inside of your main structures. But until you break the most recent, higher high or higher low of a overall trend, then that will be the only validation that you have that the trend is about to reverse, right? So I just wanted to clear that up so that y'all understand that you have to know the structure that you're in order for you to take advantage of knowing when the trend is about to reverse or knowing when the trend is ultimately about to continue, right? So this is where we have on our H1 structure, and I'm gonna clear some of these dots off just to have a cleaner chart. But this is when I say, like, my students know, like, I have my students mark up their charts every single week. But when you doing your charts, like, this is where the craft of trading comes in, right? This is where understanding, like, this is not just for shits and giggles. It's like it's a real art, right? It's a real art behind this, and once you understand the art of it, then you can paint the picture. But if you just gradually coming on here and you go straight to the 15-minute chart and you're like, oh, all right, well, I see a bullish engulfing here, so let me just randomly place a buy. It's like you don't even know what you getting yourself into, because you don't even know the whole story of price, right? You don't even know what's happening on all of your time frames. So you want to take the time to actually understand the structure that you in and the story of the market so that you can know what's about to possibly happen next. Think about it. That's like somebody coming up to you and saying, oh, tell me what's about to happen in this movie, and you ain't even watched the movie yet. It's like you trying to take a guess of what's about to happen and you ain't even watched the full movie. You watched 2 minutes of the movie. But if somebody asked you what's about to happen in the movie and you 3/4 in, or majority of the way through, you will know. You'll be able to say, okay, I can take a educated guess based off of the information that has happened in this movie so far on what's about to possibly happen next, right? Based off of you watching the movie, you gathering the data. Where most people go wrong inside of the markets, they just jump into the markets and they don't have the definitive data or enough data to say why or why not that they're looking for the bias that they're ultimately saying is going to happen. So you got to do your due diligence by really understanding what is the story on every single time frame before you go and make that that decision, right? So with that being said, we have our data from our H1 time frame. Now the last thing I will do is place a fib on here, point A to point B. So this was the low that broke this previous higher low point. Price retraced to a 23.6. We hit negative 27, but since it was only a 23.6 retrace, we can now adjust this fib, and currently we're sitting at another 23.6 retrace. So my students, y'all know what 23.6 means, but possibly we can see price come down to this negative 27 based off of that continuation level of that 23.6. Now when we think about that negative 27 TP lines up perfectly with this daily high that got broken and did not get retested yet. So it's like, all right, if the market is going to continue to barely even pull back, it's only coming back to a 23.6 level, then that's a sign that it's very bearish right now and it doesn't really have enough buyers to pull price back to a deeper retracement level. And that's telling us that there are still a lot of sellers inside of the market, right? So that's something that we want to be aware of, right? And I'm gonna remove this for now, but we'll put it on here in a second. Now that's my data for my 30-minute time frame, right? I mean my 1 hour time frame. Now let's go to our 30-minute time frame to get a little bit more data, a little bit more insight on what's happening right now. Because the 30-minute time frame, 15-minute time frame, those are more your intraday levels where it's like, okay, what's happening today? What is the structure for today? And what is my overall bias for actual, like, right now, right? So on my 30-minute time frame, same way we did for all of our other time frames, we do the exact same thing. We're gonna illustrate our structure from where our trend started. So here we had this structure start, this uptrend structure start from this low here. Then we created a high. We created a higher low. We created a higher high, right? So in our 30-minute structure, we broke here, right? We broke structure here. This was our last higher low that got broken in this uptrend structure. So guess what? This is where the market gave us an impulse. So if I just like highlight this, this was our impulse breaker structure, this whole push. Then we had a correction. And then guess what? We had a possible opportunity to get money. Impulse correction, get money. Actually, one of my students literally made $25,000 from this move right here alone. And I think he closed it like right here. He didn't even catch the full move. He literally made $25,000. Right? So shout out to my boy. But understanding these three phases like was the reason why he was able to make $25,000. Now y'all know me. I haven't traded gold damn near this whole year. I haven't been liking the structures. I haven't been giving me the setups that I've been wanting, so I ain't really been taking a look at it. I've been looking at more so US 30, NASDAQ, and even GBP USD simply because I was waiting on this little bull run of gold to finally give a pullback like it's doing now. So this week going into the week ahead, I'm definitely dibbling and dabbling back into gold. But just understanding and seeing this, you could definitely have taken advantage, right? So on our 30-minute structure, like I mentioned, we broke here, had a high, higher low, higher high, and then we can even draw a trend line here like such. Boom. And this will be like a 30-minute time frame. Boom. So based off our 30-minute time frame, we had a point A to our point B. This was a 61.8 retracement level. So students know green zone to green zone, right? So this just hit TP last week, right? This just hit TP on the end of Friday. So negative 61.8. Now typically negative 61.8 means reversal, but we still have to be mindful, like it's still a lot of bearish momentum inside of price. So I wouldn't be expecting reversal until we break structure again to validate that overall negative 61.8. Now, based off of the data that we have, remember, this was the last higher low point here. So guess what? We was in an uptrend like such. But guess what? Now we broke that uptrend structure. So now we are forming lower lows and lower high points. So in our 30-minute time frame, we are in a downtrend. Our H1, we're in a downtrend. Our 30-minute, we're in a downtrend. So guess what? What can we expect? We can expect price to continue to make new lows, lower lows, and lower high points all throughout this area until we take out our last lower high. So as we can see, we got, and let's clear that off. We got low, lower high, lower low, lower high, lower low. So in the midst of us wanting to go back bullish for gold, because I know, people probably wonder like, oh, well, when is gold going to stop pulling back and when is it going to buy again? Well, the answer to that will be structure, right? So our structure would tell us when this downtrend is going to be over and it's going into a new uptrend. So the same way that we had our uptrend structure tell us when it was going into a downtrend by breaking our previous higher low point, the same thing would apply when we are in a downtrend. It would just be the lower high point that needs to get broken instead of the higher low, like for an uptrend. So in this case, if we want to go back bullish, we will need to see a breaker structure here, like such. Price to give us an impulse, tell us the direction the market wants to go, correct itself, come back to retest, and then guess what? From there, we can do what? We can get money, right? Because we understood the impulse will tell us the direction that the market wants to go, the correction will confirm it, and then we can make money from that particular aspect. So if we're looking to catch a continuation from gold in a buyer standpoint, then we would need to see price break above this previous lower high point here. So we can put breaker structure M30 lower high. This is the previous lower high point, right? Now, of course, obviously we can keep all of these break instructions on here, but I'm gonna just clear them up for, you know, like I said, clear chart purposes. But this is something that we need to understand because this is going to tell us where the market is headed. When we understand structure, then we understand that, we know where the market is going. Without understanding structure, though, we won't be able to know where the market is possibly going, right? Now, on this 30-minute time frame, we can also kind of draw this little trend line here to illustrate, the trend that we obviously are in, forming lower lows and lower high points all throughout this area, right? Now, let me check the comment section really fast. Somebody said, where do you enter? We'll get into that. You market once a week. I do a top-down analysis for the most part once a week. And then everything else, like once you do it though, obviously like on a daily time frame, like that's not gonna change for, weeks ahead. Like you only have to mark your daily levels, maybe once or twice a week. And then the smaller time frames is what you really would mark off. And then I just kind of like add on with the data that I get. So as the 1 hour form structure, I might put a 1 hour trend line and stuff like that, right? Somebody said, what time frame do you decide where to take the trend from if higher time frame looks bullish still? It just depends. This is where that storytelling is coming into play. Like obviously if we sitting on, if we sitting at a daily level that got broken, daily level resistance that's now testing that support, if my 30-minute time frame is showing me bullish, this will be a good area to buy from. Like you just got to put the time frames together to make the most sense, right? Of course, this will be going with the higher time frame trend, which is always what you want to do. You always want to go with the higher time frame trend. But if you have a smaller time frame structure and you want to take advantage of it, you would just have to know that, all right, I'm going against the main trend and I have to be aware of that, and I have to be a little bit of like cautious. I have to be cautious when I'm going against the main trend, right? Somebody said, hey Mike, love your content. Question, how long do you typically hold your trades and what time frame do you enter most of your trades on? I typically hold my trades anywhere from a few hours in a day, just depending on the volume, to maybe 24 hours. Just depending on the market. It's just like you never really know. It's like some days I might be in the trade a hit in an hour. Some days I might place a trade and I'll sit in consolidation for a whole day before the move plays out. It just depends. It's kind of hard to give an estimate, but it's just one of those things where whenever the market is ready, that's when the market is ready. And then like I said, some days it's short, some days it's long. But one thing I don't do is like I don't hold trades for like a whole week or two. Like I'm not a swing trader, so I wouldn't like a daily. Like if I'm looking at my daily structure, think about it. When I was mentioning that, we had this impulse, we had this correction. If I took an entry off of this area here, I will have to hold this, till it gets to negative 27, take profit, or to the zeros. So like this will be weeks on holding this move. But that's not me. That's not my style. I like more intraday trading versus like swing trading, right? So I would much rather just take my moves based off of the intraday setup. So hopefully that answers your question. Hey, Lito, I noticed you changed your values of your negative 27 and went from negative 27 to negative 27.86. It's always, I feel like it's always been negative 27. I mean, negative 27.86. Now, I might have just put it like on the video to make it like easier for y'all to insert the values, negative 27, but they pretty much the same thing. But if you want to make your TPs a little bit closer, you could just put negative 27. That decimal point really don't matter too much. Hey Mike, another question. Do you still do Forex pairs or you only focus on indices, and why? What have you found different from Forex to indices? Sometimes I trade Forex pairs. It just depends. But I don't like I only trade a Forex pair if gold is not giving me what I need to get, right? Like when gold was doing all of these pushes and wasn't giving pullbacks, then it's like, damn, I can't do nothing because obviously I trade breaks and retests. So if it's not retesting anything, then it's like, well, shit, what can I do at that point? So I will only trade those Forex pairs when gold is moving slow. But the difference between those is the volume. So for Forex pairs, this is where I would like to I have when I teach my students, I will tell them to like start off with a Forex pair because this is where you can master your patience. Because if you start off with a pair like gold or US 30, like it's a lot of volatility and it's a lot of volume, and it's like you can get caught up in just like thinking that the market has to move super fast because of these pairs that do move super fast, right? Think about it. Gold moved 3,000 pips last week in one day. So think about 3,000 pips. Like most people don't even get 3,000 pips for the month. So like as a beginner trader, if you go into the market with that mindset, like, damn, this just dropped 3,000 pips in a day, and you think you're going to get that every single time, it kind of creates that false expectations of things. So when I tell people, like when you're starting off or when you're trying to develop consistency, start with a Forex pair that's going to cause you to develop that level of patience that you need inside of the market. So you're not just rushing to get in and out of a trade. You kind of let the patience and you let the structure form without having that expectation of, all right, this got to hit TP fast because I'm trying to trade, like I'm used to trading a fast pair or whatever the case may be. It's kind of like teaching a 16-year-old that just got their license, starting them off with a Ferrari in relevance to just like a regular car, like a Toyota or something that's not super fast. It's like if you want that teen to stay safe, you're not gonna put them in the fastest car. As soon as they hit the gas, the car just jerk back. You don't want to put them in that predicament because they might hurt themselves. So same thing inside the market is like when you learning yourself or when you learning consistency, it's like you don't want to put yourself in harm's way by trying to do like trade something that's super fast where you haven't developed the patience behind it yet, right? So for me personally, now I trade gold because I like the volume. I like the way that it moves, and it gives me my trades in a timely manner for based off of my schedule, right? It behaves in a way that is beneficial for me, and this is where you have to learn yourself as a person, right? Like, cause it's many different pairs that you can go out and trade, right? Like you can trade gold, you can trade it's 1,000 pairs that you can trade. It's just what works best for your personality. Some people trade gold, some people trade Euro USD, some people like, you know what I'm saying? Like what fits your schedule? What fits your personality? You can make the same amount of money on gold that you make the same like as you make on Euro USD. It's just about the lot sizes and it's about, the risk to reward, right? So the reason, like I said, why I trade gold just because it fits my schedule. It fits the style of my style of trading, which is intraday. I like to get in and get out on like to hold moves for long periods of time, but it still will give me a decent amount of structure and a decent amount of pip value that I can take advantage of. So that's just my personal like opinion or choice to trade gold. Even though I just made a YouTube video saying I stopped trading gold, that was just like I told y'all for the first couple weeks of this month. I mean, the first couple weeks of the year because it wasn't giving me structure. But now, obviously, we got some structure that we can take advantage of with breaks and retests that we can ultimately milk, right? Let's see. Where should you enter within the 3-step process? That's kind of something I teach my students, but it's just an area where price is getting retested. That's where I will look for. That's where I start the process of looking for an entry, right? So to put it in layman's terms, if I have structure like such. Let's just say this is a previous level of resistance here that just got broken, right? If I know that this is a previous level that just got broken with a brand new impulse, right? So if this gave me a brand new impulse, I know that if I trade breaks and retests, then I'm gonna look for price to come back to retest this area. So not saying I'm going to blindly place a buy here at this area, but this is where I will begin to look for my possible entries, right? I have to see the candlestick confirmation or candlestick. Oh shit, hold on, I forgot to make my screen smaller again. But I will need to see the candlestick confirmation in this area to validate that it's a safe entry to take, right? Because you don't know that this is not going to, retrace deeper before pushing up. So I won't blindly enter here unless I got confirmation, right? Of course, this is a zone that's getting broken and retested, but sometimes, it may be a trend line, right? I might have a trend line like such, and the area that I'm retesting is a trend line, right? So I'm always looking for my entries off of breaks and retests. And that's why I was telling y'all I haven't been able to trade gold because it ain't been giving me no retest. It's like we broke this high here, we didn't retest. We broke this high here, it barely gave a retest, but with a small retest like this, I'm not really a fan of it. So I really don't like to take it. And then here, we broke above. We did not retest this area. So it's like, shit, it's just going without me. And I understand that, right? So that's one thing that, just my style of trading and being able to know where my setup is and be able to spot it. And sometimes it's not present. Sometimes you just got to be able to sit on the sidelines and simply do nothing, right? Somebody said, can you do a live trade for the chat? There's no real good setups, but the setup that I was mentioning, remember, like I was saying, was that 23.6, how I said that once we broke underneath this H1 structure, it's a 23.6, then we could adjust it. And then I said that price will possibly come down to this negative 27, which was in alignment with that daily breaker structure here. So based off of what we obviously are doing inside of the market now, we've been forming a low, lower high, lower low, lower high, lower low, lower high. This last lower high point here came back to retest this previous level right here. It gave an entry confirmation here on Friday, but obviously this was Friday. The market just opened up with this gap here. It was retesting this trend line, and then from that area, that's why we kind of just got this continuation. But I looked for, bare minimum, I looked for a price to come back to this 4-hour level, which is this previous level of resistance that got broken. So this will be my target, but obviously we're already there. So it's like wait on a cleaner setup. But then the main target is that negative 27 based off of that structure fib. So no, I can't give you like a live trade on here. Just based off of my style of trading. Like my style of trading is not something where it's like, oh, I'm gonna just be able to hop on at 6 o'clock and then take a trade just because we hopped on at 6 o'clock. My style of trading is waiting on setups, waiting for the market to fall in my lap, and then take the trade based off of the market coming to me versus just entering just off of shits and giggles, right? So hopefully that makes sense, right? Now, since we did just make this new lower low, right, this is where when I talked about updating your charts as you go along, this is where now I will update the chart, because obviously we had a low, lower high, lower low, lower high, lower low. And at the time, we had not taken out this low yet. So we was up here. But since we just made a new lower low, now we can say this point right here is now our last lower high point, because they had a low, lower high that went on to create a new lower low. So from here, the reason why I mention that is because now this was, remember, this was our breaker structure for our lower high point based off of the downtrend, saying that if we broke above this level, then we would go bullish again. Now I can adjust this to the downside here because now I have created a new lower high point, right? So I created a new lower high point from this area right here. So now if price breaks above this lower high point retest, then we know that price is going bullish from that area. So that's a prime example, and I'm glad we got to go through that because that's an example of updating your charts as we speak, right? Or as the market is giving you new data. So this is, like I said, this is 30-minute time frame. So this is what a normal day will look like. Obviously, gold moves during Asian session and it moves during New York session. So like if I was actively trading, Asian session or New York session, these will be things that I will be looking for in an actual live setup, right? I will be marking off, okay, are we breaking past this low? Are we going to possibly get a retest to continue to go further down? Like that's something I would be aware of. And also I will be aware of to say that, all right, if this gives an impulse to the upside and corrects and retests the previous lower high, then I know I would be looking for buys. So that's how I would like analyze it in a live, well, this is a live market, but this is how I would analyze it if I was actively looking to place a trade right now as we speak, right? So I just wanted to walk y'all through that so that y'all will understand the thought process of why I will even be looking for a trade or even doing my top-down analysis to understand where I'm even looking to place my positions from, right? So with that being said, let me go. I'm gonna go and I'm gonna remove this, just so we don't have hella stuff on the screen. And then I'm gonna remove this, and then I'm also going to remove that, and then clear off, just clearing off some of this stuff so that we don't have hella stuff on the screen. All right, boom. And then somebody said, makes a lot of sense. I was introduced to NAS and gold first. These past couple months been bumpy. No worries. Just take your time. Master your craft first before trying to just trade. The big bad wolves. It's like playing a video game. Like when you first start off a video game that you just getting started with, it asks you, like if you go into any video game, whether it's like Call of Duty, Madden, 2K, they'll ask you, what is your experience level? Do you want to start off the game on extreme hard difficulty, or do you want to start it off as beginner, right? So it asks you that once you get started. And if you put it on extreme difficulty and you don't even know how to play the game yet, guess what? You're gonna keep dying. You're gonna lose. You're gonna lose every single time because it's like you haven't even learned the game yet before you even like started playing, right? Like you gotta get some seasoning under your belt before you go to that extreme level of difficulty, right? So same thing with like pairs like gold or pairs like US 30, like they move so fast that they have a higher level of difficulty because it takes a little bit more comprehension, a little bit more understanding of what the actual market is doing because the markets are moving so fast. Like I know I'll be coming up with a lot of analogies and stuff, but think about it like this too. It's like baseball. Like think about baseball. So you got the major leagues, you got like college ball, you got high school, you got little league, whatever the case may be. So you think about baseball, the major league, they throwing the ball when they pitch. They pitching anywhere from like 90 to 100 miles an hour. So if I'm a batter, right, I'm trying to bat and I'm trying to hit the ball, do you think it's going to be easy for me to hit somebody that's throwing the ball super fast 100 miles an hour if I ain't never played baseball? It's like, it's going to be hard because it's an experience level that comes with that speed. But if I'm a brand new beginner or if I'm inexperienced and I got a little leaguer pitching to me at 30 miles an hour throwing the ball super slow, it's like I have a higher chance of hitting that ball because it's coming super slow because I don't have a lot of experience. But it's easier for me to hit a slower ball than me hit a faster ball, right? So same thing inside the market. When you're dealing with a faster pair, it's harder for you to strike on that pair because you have less experience. That's why you got to get your feet wet. That's why you got to really understand what it is that you looking at. That way that you don't really put yourself in an environment where you can lose easily, right? So that's, like I said, another analogy for y'all, so it can make more sense, right? Um, let's see. Do you have any future trader students, or you only teach forex style? Fuck with your style of trading. Yeah, a lot of my students are future traders. Like my student Jasmine that I was talking about on Instagram inside of my Telegram chat last week. She trades futures full time. She don't trade forex. She just trade futures. Um, anything that like I feel like I get this question a lot, but futures and forex, they really the exact same. Like it's the exact same thing from a chart standpoint. When I look at the XAU USD chart, it's gonna look at the same as what is it called, GC. It's gonna be the exact same. Like of course maybe the structure or the candles might be a little different just from a perspective of price points, but outside of that, it's like it's the same thing. Structure is still gonna be structured. So you would trade your futures pretty much the exact same way that you would trade forex. The only thing with the futures is the difference of you being able to hold your positions. Like with forex, when you trade forex, you can more like hold your positions for a longer period of time. Majority of the futures traders, a lot of times they either like funded accounts or like even if there's a regular account, you don't really hold your positions for long periods of time because the futures market closes and then you have to like re-enter your position, especially with funded accounts. So that's where like the difference is. But outside of that, the structure is still the structure, the style is still the style. Like impulse correction continuation, that's all the same. It's just your matter of the platform that you're using, futures platform um or a forex platform. All right, so um that's pretty much the difference, right? Somebody said, "Do you check the DXY?" Yeah, I check it from time to time. I usually keep it pretty much marked up just to kind of get a feel for it. But when I'm actively trading gold, I don't really focus too much on the DXY because gold is just, even though it's going against the US dollar, it's not like if the DXY is going up, that don't mean gold going down in the sense of just from the DXY. Sometimes the gold can be going up and the DXY can go up. DXY is more, in my opinion, fixated with like forex pairs like GBP USD. The DXY is going up, then GBP USD is probably going down. But for gold is backed by a little bit more things, so it's not as in conjunction with the DXY as like a forex pair. So hopefully that makes sense. When you enter a trade, do you use the fib to enter? At what percentage or number on the fib? No, I only use the fib to determine my predetermined take profit levels and let me know which retracement level price is retracing to know the behavior of the price for my continuation. Meaning that like, all right, like how I was just telling y'all, a 23.6, that's gonna tell me a certain behavior in relevance to what I can expect from that fib level and price going to our target. Now price retrace to like a 78.6, then I know it has a different behavior and I should be expecting it to go to a different target. So like whatever the fib level it retraces to, that's giving me a sign of what behavior I should expect going from the continuation. So that's what I use my fib levels for, but I never just enter blindly. Like I'm not one of those, oh, price got to come to the golden zone and I'm gonna just buy and place a buy limit there. Like I think that's gambling because you don't really have a confirmation to enter that trade yet. So I need confirmations before I enter my positions, right? Mike, do you not use foundation levels, and how important would you say they are? No, I don't really use them. I feel like they're somewhat important in a sense, but for me, it's just like, this is just my personal opinion, but I feel like it just caused me when I did have them on my chart, because y'all know like I used to have them on my chart, but it would just cause too much decision fatigue, because then I would be like, oh, I'm at a monthly level, like I gotta have consolidation here, and it'll throw off my like just my thought process. So I just made the decision to remove them because like, and it was like blocking, like having, you know, a whole bunch of like lines on it. It just kind of threw off my brain. Like I don't know if I got ADHD or whatever, like decision fatigue, whatever the case may be. It just, for me, I prefer not to. But sometimes I'll put them on there just to see like if price is consolidating. I'll look to see if it's at a foundation level to see like if that's the reason why. But outside of that, no, I don't really use them. Yes, I've been looking on UJ for the past 2 years, looking to transition to NAS, US 30. I'm profitable, looking to scale on bigger returns like $1,000 days and get more out of the markets. Any advice? Uh, I mean, shit, you don't necessarily gotta go off of UJ. If UJ is what's printing, then shoot, continue to trade UJ. Just up your lot size. You can get $1,000 day off of UJ easily. Like one of my students, he trade UJ faithfully, and he make $4, $5, $10,000 on his UJ setups consistently. All right, so that's one of those things where it don't really matter the pair you trade. It's just about the lot size and the like the math behind it. Right, so everything really in this game is numbers. Think about it. If you use a 1.0, a standard lot, you catch 100 pips, that's $1,000. But if that's like, let's say you caught 100 pips on gold with standard lot, that's $1,000. But if you caught 10 pips on a 10 lot on UJ, then that's the same $1,000. So it's just like, it's just the math behind it, right? So it really don't matter as long as you find a pair that you like and enjoy and that you that fits your schedule. Like, of course, I always tell my students this. It's like, bro, if you know you work from 9 a.m. to 5 p.m., you shouldn't be trying to trade the New York session pair because you're going to be at work. So it's like, find you a pair that moves during Asian session that you can come home, get off work, trade, make your money, and then go about your day. But most people just so fixated on like trying to trade what's popular. It's like, no, trade a pair that fits your schedule, fits your personality, fits what it works best for you. Because ultimately that's the main focus of this. It's like, it's not to be like everybody else. It's to make money, to extract money from the market. Like I like to say the saying, I print money. Right? Like, how are you going to operate your money printing machine? And it's like, if you find a system that works the best for you to print the most money, then use that system. But just because your money printer is, designed a certain way, that don't mean that you gotta design it the way that Johnny down the block has got his printer machine working. It's like, you make it make sense for you, because ultimately it's your money, it's your capital, and it's like you got to create the best experience for you. And I feel like a lot of people inside of the niche kind of just gravitate towards what's popular instead of like what actually works for them. So that's why, like I said, I even mentioned when I did that gold video. The gold video that I'm talking about is this one right here, where I said I stopped trading gold. Here's why. I stopped trading for a week because shoot, it wasn't giving me what's beneficial for me to print money. So it's like, shoot, I gotta do something else, right? So that's what I mean when I say that. Like, if it works for you, then let it work for you, right? If you don't trade gold or haven't been trading gold, what would you recommend that has structure and volume? I would say USD JPY is a good pair. GBP USD, solid pair. Euro USD, solid. And then even like a lot of people been like talking about silver lately, and I had checked it out, and silver been solid. It don't move as aggressive as gold, but it still has been printing. I know oil, like US oil, solid. So it just, it just depends. But that's why when you have like what's it called, a watch list, you can kind of just click on all of the pairs and see like, okay, based off of this, what pair has a good structure, which pair is moving pips. Like I even use this thing, like this trading sessions indicator, and this was when I get into like my nerdy, like my nerd shit with trading, right? But this is where like I'll go and I'll study the ranges of each session, so I know like what to expect. So meaning that, all right, if I see, and we gonna not pay attention because this ain't normal gold, this is just like crazy. But for the most part, normal gold, it says this Asian session was, what was this, 1,300 pips? Yeah, 1,300 pips here. London session, you can see it only had 400 pips, and then New York session was 1,200 pips. Meaning that if you take a look at majority of these, Asian session and New York session is when the most volume is present on gold. London session is the smallest. It's the smallest range, meaning that you're not going to get a lot of volume during London session. Meaning that if you trade gold, you should trade it during Asian session or you should trade it during New York session. Why? Because you get the most volume during those two sessions on gold. So like the same thing applies for any other pair. If I go to US 30 and I say, okay, this is moving the most during New York session, then it's like, all right, I need to trade New York. I need to trade US 30 during New York session so I can take advantage of the most, the most volume inside of the market, right? So that's just something where you can use like stuff like that to just go and back test and really understand what pair is best for you, right? Let's continue to look. Let's see. Do you wait for New York session or you take setup whenever it presents itself? I take a setup whenever it presents itself. Like I mentioned, gold, it'll move during New York session. It'll move their Asian session. If it's majority of the time it's between those two, I'll take it. Last question, Mike. Do you have a specific routine? You wake up and look only from 3 a.m., 5 a.m., 8 a.m. till whenever? I don't know, man. Walk us through your daily routine coming into the markets. I would say I have like somewhat of a routine, but it's not like a set in stone, like it has to be this way every single time, in the sense of like I don't wake up at 7 o'clock every single day and log on to my computer at 7:15. Like y'all know, well, for majority of y'all know, I got a daughter now, so my schedule is all over the place. Like some days I'm up at 7, and some days I was up till 7 with my baby. So it's like, shoot, I might sleep in because shoot, I was up with the baby. So it's like right now I'm in a season of kind of just, I have like my majority, like of course, like I'm looking to trade New York session, but some days, shit, I can't get up, or I've been up all night, so I sleep in for a little bit, and it really depends on my daughter because she run the show now, so it's what she say goes. So to walk you through it in a sense though, I definitely look to trade New York session. I'll mark up my charts. I'll send out my analysis inside of my free Telegram chat. I'll do all of those things. And then if an opportunity presents itself, I'll take it. But if not, then it's like, all right, back to being a dad. And I feel like that will be the same thing for y'all that, like have jobs. It's like, if you got a job, at least that's a little bit more structured because you have an actual time period that you work. But for those that got kids, y'all know it's different when you're dealing with a newborn. So my schedule ain't how it used to be. But I definitely, the routine that I used to have would be like I will mark up my charts the night before. So I will wait till like 9 o'clock at night, mark up, do everything I just did that I just showed y'all. Like literally, all right, so it's what, 7:32. So let's just say that this was 9 o'clock. I will set an alert for this and say, all right, if it broke above this area, I'm going to be looking for buys. I will set alert here. If it break beneath this, I'm pretty much looking for sales for the most part, right? Of course, that's with the understanding of my overall higher time frame bias. So I will have all of those areas marked off to know which area that I'm looking to buy or sell from. But that'll be it. And then ultimately I will put like a ghost pattern. So like, let's just say I'll do something like this, and I'll say, all right, watch price here, and then that'll be it. And then come back, revisit it, see where the market is at once I wake up in the morning. So that's pretty much it. That's kind of like the structure of it, but it's not like a super like specific. Oh, I gotta wake up at this time, because the market gonna move when the market move, and it ain't no set time. That's why I tell people, like, just because you woke up to trade today don't mean the market gonna give you an opportunity to trade today. It's like, just because you woke up at 7:30 and like, oh, this is my morning routine, I gotta wake up at 7:30 and I gotta trade. It's like, no, it's gonna f you up, because it's like, just because you came to the market don't mean that the market gotta move. And once you understand that and you move from a place of like openness, it's like, all right, I came to the charts today, wasn't no setups. Okay, cool. On to the next. And that's that. All right. Can you show a flag pattern? Yeah, flag pattern just looks like this. Boom. Boom. And then continuation. So flag is just literally this. Impulse correction continuation. You can Google them too, like, to see what they look like, but sometimes it might look better on a higher time frame with less noise, but they everywhere. They all over the place. Like, this is a flag pattern. 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 Like, they're everywhere. Why does it look like it's divergence about to start forming? Shoot, it is. And that's what divergence is, right? Like, divergence is when you're coming to an end of a trend and the trend is possibly about to reverse. So, like, obviously we can see the RSI, this is going down, and then from here it's going up. So it's a sign of divergence. How do we know that this is about to buy? Once we break above this structure, take out the lower high point with a brand new impulse, we come back to correct. Then from there, what do? Get money. So yeah, it looked like it's diverging. That's a great observation. Now we just gotta wait on the setup to occur to know that the observation that we had about the divergence is valid. And once it give us the verification that it's valid, then you get money, right? So hopefully that makes sense. Mike, did you go over the loss you took in the market? No, I'll go over that once I go into US 30. What time frame do you take a trade? Usually on M15 or M30, sometimes M5. What prop firms would you recommend? I don't like prop firms, so I wouldn't recommend any prop firms. I'm an OG. I've been trading since 2019, before like prop firms was a thing. So like, I got the model of like building your account, like how I was talking about at the beginning of the call, like where I'm a do an account build. I like that. Those funded accounts, honestly, I think they set out for y'all to fail, because there's so many rules and all of this stuff, like trailing drawdown and a whole bunch of BS that, like, you don't got that in your live account. So like I said, I'm an OG in a sense, where it's like, I'm cool. I'll turn $100 into 100,000, and it's like, it's doable. It's just it's just gonna take you a longer time versus a funded account. It's like, all right, you start off with a 100K account, you can get a 5K payout, possibly faster depending on your trading style. So it's ups and downs to them, but like I said, I rather prefer just the live capital route. All right. If price doesn't respect structure on big time frame, is it valid on M1? Not really sure what you asking. Like, M1, you can have a lot of stuff going on M1, but it's a lot more risky when you trade M1. Damn, we got a lot of questions tonight. I like this interactive stuff. I like when y'all asking questions, because I love to answer questions. So that's dope. I really don't be on social media. That's why I was asking. I'll be locking in with just loading money up in my live broker on TradeRate. Okay, cool. Yeah, that's cool. I'm saving for your mentorship. Perfect. Futures and Forex same sport, just a different arena. 100%. Man, I gotta go to work. I'm gonna trade a New York session. Bro, thank you so much. I feel the same way about no problem. How do you manage spreads increasing out of session in regards to your trades taking the time to play out? Just depending on if I'm in a trade and I know that, all right, the market about to close, like especially with gold, where I'm at Central Time, it closes for an hour at 4 p.m. So it's like if I know I'm actively in a trade and I know the spreads is gonna widen up on market open again, then I might adjust my stop loss or just like remove it in a sense, based so I don't get like stopped out by the spread. But outside of that, I don't really, take too much account into it unless I'm like about to close the trade or looking to hit TP or something, or like I said, stop loss. So that's about it. Great session tonight, Mike. I appreciate that. Trading session indicator by who? Shoot, I don't know. You can just come up here and type. Oh shit, what did I just do? Where is it at? Where's the indicators? Okay, here. Trading sessions. Damn, it don't say. I don't know who it's by. I just typed in trading sessions. So it's this one under technicals. So it's not like the ones that people create. It's the one that TradingView gives you. So if you click that one, but I tweaked mine like a little bit. I made the session times like that real, because when you first do it, for some reason it's kind of off. So like when you first got them, like you see how like this is mine on and this is mine off. Like I increased the trading session lengths because the regular one kind of was off by a couple hours. But that's it. And then I changed I took that average price off, and then that was about it. But you can, tweak it to your liking. Mike, did you go over loss you took because going over mistakes help us? No, not yet. Does the volatility ever scare you? No, not really. It's like with volatility, this is where like understanding like and using proper risk management. Because I know if it's volatile, real volatile inside the market, like gold right now, it's like moving like freaking thousands of pips in a day. You just gotta accommodate for that. All right. So meaning that if I know it's moving 1,000 pips in a day, I'm not about to make my stop loss 50 pips, because like shit, that's bound to get hit in a 1 minute candle. So it's like you just gotta make accommodations, but the risk to reward will still be the same. It's like, think about it. If you got a normal average pip range of 300 pips in a day, and then your stop loss is 50 pips, then you might have like a 2-to-1 risk to reward. You risking 50 pips to make 100 pips. But then you take that same math, and if the average price range is 1,000 pips in a day, then you might have to have a 200 pip stop loss to make 400 pips, right? So it's like it's still the 2-to-1. You just gotta accommodate your lot sizes, and you gotta accommodate how big or small your stop loss is. So it's really just like math, like breaking down the mathematical side of it and really understanding like the risk to reward. Only Forex pair worth trading is GBP JPY or USD JPY. Gives about 90 to 100 pips in a day without news. I've done that too. Chart GJ. I don't like GJ, honestly. I think GJ has terrible structure for some, like when it's not trending, it's like it's just ugly. So I don't really like GJ, but I do know people that trade GJ, but honestly, I don't like it. What moving average do you use? I don't really use it, even though it's on here. I don't really turn it on. I don't even know why I still got it on here. But it's just a 50 EMA. But like I said, I don't use it, but it's just on there. Do you use a calculator for risk management? No, I really just do the math in my head. Like, I mean, of course, like I use like the long and short position tool, like to see how many pips. But it's like if I'm risking 100 pips, I know how much 100 pips is going to be with the lot size that I typically use, right? So it's like if I use 5 lots and I got 100 pip stop loss, that's 5 racks, right? So it's 5K risk to make possibly like 10,000, right? 2-to-1 risk reward. So it's like that's where like knowing your pair as well, and it's like kind of you've been trading this so long, what's the lot sizes to use for your the levels of stop loss. Like if I know on average my goal stop loss is 100 to 150 pips, I know which lot size to use in relevance to that. But also I do use a compound sheet, but that's like when I don't do the math. But that's like an Excel that we was talking about at the beginning of the call. By we having the free TradeView account, do a delay time? No, it's live. Do you use no? What's the future for gold? This volume is like a meme coin. I don't know the future. I just honestly I don't try to predict the future. I just like to trade what I see. And honestly, like I know people be out there like I said gold was going to 5,000. I'm the gold master. It's like, I mean, who cares? It's like, did you make money or not? No matter where you say it's going, it don't matter where you say it's going. It's just like, can you benefit from it? So honestly, right now, just based off of the structure that we have though, I would like to see gold come to this area here first. This is my first area that I'm kind of interested in, which is 45.50-ish area. I would love to see a retest off of that area. And then my next area of interest will be this area here at 43.8-ish area. And those are just areas where I'm looking to possibly buy from. Right? So like that's the only thing that really matters to me. I joined a little late. Can you lead this live up? Yeah, absolutely. It'll always, every live that I do will always be, if you go to my channel, you hit the live. So you got the home. Then if you hit live, all of the recordings that I've done, so every single call that I've done is on here. I leave them all up. So you can go back and rewatch every single live stream that I've done. I like what I'm seeing going through the boot camp for sure. Definitely continue to tune in. My eyes are somewhat trained. Like I see the setup, I'm not finished. Perfect, man. Can keep grinding. Flag pattern and just trend continuation, higher high, higher low, 100%. How many trades do you take a day? I don't even like to trade. I don't even like to take 3 or 4 setups a week. So it's like, it just depends. Maybe 1 for a day, maybe none. How many accounts have you blown? 5 or more, or less than 5? Definitely more than 5. I'm the same. Get it out the mud with your own money. Mike, I don't know what you fed to Contrell, but that boy don't miss. See, look, let me talk about Contrell. So a lot of people, y'all, like, be asking me or, like stuff like that. Like, Contrell was somebody that I just brought under my wing that, like, he would come to my house. He would help me. Originally, with Contrell, like, he was working, like, he was doing camera work for me. Like, he was a photographer, videographer, whatever, when he first moved to Dallas. And yeah, hit me up like, bro, like, let's collaborate, whatever. And I was like, yeah, if you can shoot this for me, then I can help you with trading or whatever the case may be. And then of course we develop our friendship from there. But everything that I'm teaching y'all. See, this is one thing I want y'all to understand about Contrell, and it's like such a beautiful example because Contrell just had a $25,000 day last week, right? So he absolutely killed me. But it's like the reason why he absolutely killing it, and this is what I try to explain to y'all, is one, he asks a lot of freaking questions. Like control be blowing me up like, bro, I got a question about this. But not to say it's a bad thing, it's just to say that like he has the the willingness to learn and the openness to take information from somebody that has the results that he wants, right? And he's been at my house, he's seen what I've done, like he see my approach, and this is why I explained it with the things that the way I explain them. So when I'm on here telling y'all like, all right, I'm not looking for a setup unless it do X, Y, and Z, he would literally be in the background sitting in my office like, all right, I want to place a trade, and I'd be like, no, like, why are you looking to place a trade? We ain't got X, Y, and Z happen yet. And once you begin to understand that, it's like now it's engraved in him, and he can, duplicate that to the extent that he's been duplicating it. And it's like now he's seeing this success because he was able to sit back, ask questions, and then do everything in the way that I pretty much showed him. So same thing for y'all. When I'm going and I'm breaking down my charts and I'm saying this is why I'm doing this is why I'm doing that, you got to take that same information and follow it. And it's like, don't steer away from what I teach y'all, because what I teach y'all is literally how to make money from the comfort of your own home, from looking at a computer screen. So you got to be able to take the information and really apply it, not just take the information and just put it in. Like most people learn a whole bunch of stuff about trading and then they just got knowledge, but they don't like apply it. What he did was he took every single thing that I taught him, every single thing that I showed him, and applied it. And now look, he having 25K days. Shit, he having days like I have 25, 30K days. And it's like, that's how I know it's duplicatable, because if I can do it, it's one thing. But if multiple of my students can wash, rinse, and repeat, do the same exact thing, it's like, it's a reason. Why? Because it's duplicatable. So everything that I teach y'all inside of these streams, everything I teach y'all inside of the trading camp, everything I teach y'all inside all of my YouTube videos, is for you to duplicate so you can do the exact same thing. But of course, you gotta have a mindset. You gotta have the mental framework to be able to really see what it is that I'm teaching y'all and then go out and apply it to y'all trading. So that's what, like that's a prime example, right? Let's see. 4T Gold went out. I don't know what that means. How do you start a live account? You can sign up with the link in the description, put in all the information, and then you'll be good to go. Will you start the account build this week? I don't know yet. I'm a kind of think about some things and kind of like I already got the account set up, but I just kind of gotta get some stuff in order. I got a lot of things to do this week. Some more videos to record from a business standpoint and all that stuff. So it just depends on my schedule this week to see if I can start it. Because when I do start it, I want to go full-fledged. Like I want to be able to do it on Instagram, do it on YouTube and all of that stuff. So I just got to make sure everything is in alignment with my schedule and stuff before I start it. Because I don't want to give it like 50%. I want to give it 100%, right? This is my first time seeing you live and you seem real genuine. I'm gonna have to tune in 100%. I appreciate that. Damn, every time I scroll thinking I'm at the bottom of the chat, is way more questions. What's your overall strategy? Shoot, I guess, market structure, that's the strategy. It's not like that's really it, structure. Other than account build content, would you consider doing a free account giveaway, like a 5 or 10K trading account? I don't, like I said, I don't recommend prop firms, so I wouldn't. That's not like a thing like that. But I've done giveaways in the past. Like, where was it? If you go to the trading camp series, at the end of the trading camp, I gave away, I think it was a monitor. I gave away a monitor. Was it cash? And I forget. I give stuff away. Like I give stuff away, but it don't be like just from like a funded account perspective. How do you know what percent of your account to risk per trade? That's just a part of your trading plan. Like I always tell my students, don't risk no more than 5%. But whatever works, best for you. Of course, don't go risking half of your account at one time. It's just like set a threshold. I like to I'm at the area where like I'll do 5 to 10% because I like to scale. I like to build my account. So that's just me. But it also depends on your skill level as well because I know like all right, I'm not gonna miss 10 times in a row and lose my whole account. Like that's just not, it can happen, but it's like very unlikely to happen. So it's like I risk a little bit more, but that's because of my skill level. What do you think on gold? Like I said, I'm looking to see if we're gonna come down some more before we get another buy up. But right now we kind of just in this area where we need a little bit more data. We can either break above, retest, then they go higher, or we can continue to push down to this green level or this red level here. How did you get psychology on point? I read a lot of books and I was just being intentional with everything. Like I wanted better for myself. So it was I I just sought out things to be better in a sense. Like think about it. When you intentionally try to be a better version of yourself, you become a better version of yourself. So it's like I intentionally try to better my psychology. I intentionally try to better my level of thinking. I intentionally try to become a better trader. Like I intentionally do those things. So what does that intention look like? It looks like studying. It looks like learning information and applying the information that I learn. Is seeking out, like different perspectives, different information, and just gathering information to really understand why things work the way that they work and or why they don't work, so forth and so on. So just being intentional, that's how I got my psychology on point. I should have bought your blueprint when I had the chance. Yeah, I guess. Damn, hold on. Am I tripping or do I keep seeing the same comp? Hold on. Can you lead this live up? Yep. How do I use the fib? Go watch Trading Camp, and I'll talk to you. I mean, not talk to you. It'll teach you everything. Can we get a compound sheet? It's in my blueprint. So the students, it's uploaded in my student blueprint school community. You are a transparent Mike to go. I appreciate that. Somebody said 1 hour time frame gives an impulse and a correction has started. Do you drop to the 15-minute wait for structure line up, or if the 5 minutes show in the same direction buyers, do you enter or wait? I wait for the 1 hour to give an impulse, a correction, and then retest one of my areas of interest, and then I'll look for a entry signal at that area of interest. The entry signal could be a candlestick pattern, or it could be a shift of structure on the smaller time frame like M5 or M15, just depending on the setup. With gold volatility, if you were to take a buy, which lot size would you be comfortable using? I'll use 1 or 2 micro only. It just depends, like how much I'm willing to risk. So if I'm willing to risk 5,000, 1,500, or whatever I feel like I'm willing to risk, that's what I'm comfortable with. So you always base your lot size off of your percentage based risk or what you comfortable in losing. Why are you waiting for those lows? Because I'm looking to buy again. I could continue selling, but I'd rather wait for it to get to the low and then buy. What brokers are you all currently using, if you don't mind sharing? The broker I use the link is in the description. That's the broker that I use. I use Liquid. You are a really good teacher. I appreciate that, bro. Should I watch this live or Mike's course? Watch both. I risked my last amount of money in my account to get mentored. And like I said, it definitely paid off. That's what's up. Have you broke down US 30 yet? No, I haven't. Who's control? Mike Student. Yeah. All right. All right. I'm at the bottom now. When you do the account build, do you use it for your main trading account? No. Anytime I do an account build, it's a separate account solely for that account build. That's only for that particular build. I saw someone scalping an Insta with just $10. So I tried it with 50 euros. It went from 50 to 2.2K. Never doing that again. Why you say you're never doing it again? If it sounds like you made money. Can you do a video about scaling an account? Really, scaling an account is really just a series of taking good trades. It's really just duplicating the same things over and over again. Don't see you use 1 minute or 15 minutes for structure breaks. Is it safe to say 30 minutes is what you need to get broken to consider structure change? Nah, I use M5 for a structure break, just depending on when, like what the move is I'm looking for. If I'm going with the trend or if I'm going against the trend, so forth and so on. Said I just start reading The Disciplined Trader. That's great. When will you have a 50% off sale? Those days are long gone. Yeah, I don't do those 50% sales. Maybe catch Black Friday. It may not be 50%, but it might be some sale, but nothing like that. No one is providing the value you're providing. I appreciate you, Mike. Thank you. I appreciate that. So when you enter a trade, what time frame are we looking at? M15, M30 ish, sometimes M5, whatever the case may be. Either one of those 3 time frames. What prediction on when the move is going to happen? What's your prediction on when the move is going to happen? I don't know. I don't guesstimate. When they happen, it happened. That's where I set alerts. It's like you set the alert. When the alert go off, it's like, bro, that's when I'm looking to execute. Otherwise, it's just like I don't really, I'm not trying to predict it. I'm just reacting to it. Do you use a trade copier, bro? No. When do you know when it's the lowest and you're ready to buy? When it's at an area where I'm looking to buy from and it give me the price action signal. So like, I feel like a lot of the questions that y'all asking are like good questions, but it's also things that you find the answer to these questions when you backtest. So like, meaning that if you ask yourself, like, let's just take gold for example. So if I just look at this area right here, and you ask yourself, okay, I seen this impulse push up. This was a correction, and then it gave me a continuation. So if you asking how do you know how far it's going to pull back or like how deep it's going to pull back, you can go back and backtest, and then you will see like, okay, this was an impulse, this was a correction, then we got this huge continuation. Where would I possibly enter? So you will ask yourself, okay, based off of what he's teaching us inside of these lives and teaching us inside of, trading camp series and all of that stuff, you will see like, okay, well, this came back to a previous level of resistance, came back to retest that area. And then what were the candles doing in this area to tell us that it was going to buy? We started to see, bullish price action signals, buyers stepping inside the market. How do we know buyers are stepping inside the market? By seeing like bullish engulfing candles, bullish variations, things of that nature. So this is where, understanding candlesticks are important. And then if you aren't comfortable taking an entry down here, then you will ask yourself like, okay, well, if this is the H1 time frame and I'm not comfortable entering the H1, then if I go down to M15, how do I see like the structure to validate where price is going to push from? So then on the 15-minute time frame, if you see like, all right, we had a breaker structure here. This was the last lower high point on M15. Price broke above here, retested this area, gave a bullish price action signal. This will be a good area to buy from. How do I know it was a good area to buy from? Because I can literally see it from the back test. that this was an area where price pushed from, and this was a break and a retest of previous level of structure and gave a bullish price action signal. So it's like when you going and like when you asking them questions and when you really trying to figure it out, it's like the answers is in the previous data, right? It's in the previous data. So like even all of my students to tell you, like when I have them do homework assignments, the homework assignments is so that they can be comfortable enough with the previous data and know that, all right, this system is worked thousands of times in the previous, the previous data beforehand. So going forward, when I'm looking to take an active trade, all I have to do is look for the same setups that was previous in the past, right? It's the same thing. It's wash, rinse, and repeat. So that even when I was talking about control, like duplicating, it's like I done taught them how to do X, Y, and Z and duplicate it. Same thing. It's like, so when I was on my journey, like trading, I had to go and figure it out. Like I had to go back and like, okay, I would literally go and say, why did this move happen the way it happened? Right? Like what caused this move to push away? So if I'm looking at like a huge impulse, so let's go back. If I see, all right, this move pushed up drastically from this area here, I'm going to go back and back test why it happened. And then I will see, oh, price broke and retested the previous high. It then gave me a candlestick pattern at this area. So that's why I had this move happen, right? It's like reverse engineering, right? So it's like when you go back and reverse engineer, you kind of teaching yourself to know what to look for. And that's what caused me to be able to like really have an understanding in the market, is because I just went back and just back tested. And that's how I'm so confident to say where the market is going next, or like having my bias or whatever the case may be, because I back tested. Can you show us your fib settings? They in the fib video on Trading Camp, but I mean, these are the fibs here. This all of the settings is right here. How much do you charge for your mentorship? If you want to apply, you can hit the link in the description, and we will come up with a solution on what you need, and then go from there. Can I trade gold future using this strategy? Yeah, absolutely, 100%. It's just structure. Can you talk about the indicators that you are using? It's not. I don't really use indicators. The only indicator that I actively use is the RSI, which is just the spot divergence. Trading sessions, this is just to show what the ranges are for each session. And then the EMA, like I said, I don't even know why I still got it on here, because I don't use it. Pivots, this is like, if you go back to OG, if you're an OG of this channel, you know, like I used to use the pivots a lot. But I remember like this was the very first video, one of the first videos I made, an insane Forex strategy that make you profitable. I used to use the pivots, but I don't really use them now. But it's just the good to see them and see like where they at in relevance. The pivots, all the pivots tell you is just like based off of the previous day's range where the market could possibly go next, based off of the fluctuation of the previous day. All right, so I don't really like use them, but I just leave them up there just in case I do want to turn them on and see like where is the pivot at for that day. And then this PO3, this is just a 4-hour candle. I just found out about this so I could see the 4-hour candle as I'm like on a smaller time frame. Like if I'm on M30, I want to see what the 4-hour candle looks like. So that's what that is. But outside of that, that's really that's it. Is it better to back test on 1 hour M15, or does it depend what you're looking for? It depends what you're looking for, but hold on. My girl texted me and she trying to give me an answer. Hold on, y'all. All right. What was I saying? Oh, is it better to back test 1 hour? It's better to back test on all the time frames. Like, You gotta, when you backtest, you gotta put everything that I told y'all into play. Like, you don't just backtest M15, you don't just backtest H1, you don't just backtest whatever. Like, you gotta backtest all of it, all of the time frames to know why things happen. So when I backtest, I'm not just looking at H1. I'm seeing, okay, this happened on H4, this happened on daily, this happened on H1 to get the result of the M15. Like, use every single time frame when you're backtesting. Do you know ICC? No, I don't know. Well, I heard of ICC, but I'm assuming it's impulse correction continuation, which is pretty much what I guess like you can say that this is in a sense impulse correction continuation. But I don't like trade it the way that they trade over there. What are some good books if you can tell me? My list of books that I like to recommend is in this day one of trading camp. Here, this book list. So all of these books here are books that I recommend. So y'all can go to trading camp day one and get all of those books. Just got here. What are you doing now? Waiting for a retest. Wait, what? Somebody said I can read lips, Mike. Y'all nasty. What the hell are you talking about? What are you doing now? Waiting for retest? I'm not waiting for. Right now I'm waiting on to see if we're gonna break this structure to go to high and break above this lower high to go higher, or if we'll come down to this daily level. Either this 4-hour high or this daily high. So this was a high here, and this was a high here. So I'm waiting to see if price will come back to test those levels here, or here. And then I want to see how price is reacting in that area. And then I'll come up with the bias once we get to those areas. So really, I'm just waiting on price to get to my area of interest to make it make sense. Do you mark out all of the breaker structures or the most recent? I mark out all of the ones when I'm doing my full top down analysis. I'll mark out all of the breaker structures, and then once I get my top down analysis, I'll erase them and only put the ones that's really recent. How do you feel about Gates FX? Honestly, I don't know anything about Gates FX. I see this one person talk about it on a story, but I don't know anything about it. Alright, said LOL, thanks. Alright, cool. Alright, so it looks like we at the end of that. So that's the end of that. And then let's go over US 30 real quick. I'm gonna break down the trade that I took last week and the loss that I took, because I know y'all was asking about that. And then honestly, we've been on here for 2 hours, so I'm not gonna do a full top down analysis on US 30 today, because obviously, like I was just telling y'all, my girlfriend, she was asking what we about to eat for dinner, what I want for dinner, and she about to be back with my daughter, so I gotta get to that. So we already been on here for 2 hours, so definitely not gonna go a full top down analysis. I'll break that down inside the Telegram chat, so make sure that y'all inside of the Telegram chat this week. The link is in the description to join the free Telegram chat. That's where I drop all of my updates, my live updates throughout the week. But to go over the trade that I lost this week, it was in this area. So ultimately what I was looking at was there's a point A to point B, and then we had this level of, this was a breaker structure based off of this level here. So we had a breaker structure, really was here. And then ultimately I was saying that I was looking for price to potentially stop at this area, previous level of resistance. Price that broke above it, I was looking for price to retest. This first trade I took, I think this was Tuesday, it hit my TP1 because my first TP was this level right here, this previous level of resistance on a smaller time frame. But then it just pulled back and it pretty much stopped me out. So I took some profits at this area, but the remaining of it lost because obviously it failed to make a new high. And then the second one that I took was, I think it was right here. it was based off of price breaking this little minor lower high point here, breaking above, retesting, giving bullish price action signal. But then once again, price failed to make a new high in relevance to the previous highs that were forming. So in totality, all this was just a result of price failing to make new highs. Even though we had an impulse, we have a correction. It's just every time that price was I was looking for price to give us a continuation, it just didn't. And it was respecting this trend line like such. So originally when I had to buy here, it hit the trend line, it rejected. This time, take to buy here, it just hit this level of resistance and then rejected. So I'm still waiting for this to possibly buy, but it's just like it's a patience game. This obviously has a real deep retracement. We had at 88.6. So it's just a matter of the timing on this one. Of course, like technically, yeah, I could have had my stop loss in a better area to invalidate the move, but based off of this time frame, I didn't want a huge ass stop loss. So from a 1 hour standpoint, technically this stop loss is supposed to be underneath this higher low point right here, but obviously you can see that's 688 pips. So to have a better risk to reward, it has stop loss underneath, I think it was this low point here. So to get a better risk to reward, I had a stop loss closer, right? So this is where you make business decisions where it's like, all right, I want a better risk to reward. I have a chance of getting stopped out early. So I accept that. And if you get stopped out, you get stopped out. Versus if I had my stop loss down here, this will invalidate the whole move. All right. So the move will be completely invalidated if it was underneath here. So this is just one of those situations where, like I said, prices failing to make highs. It was still overall correct and the continuation wasn't ready. And I had my stop loss a little tighter, which I'm more than okay with in this particular example, because it's like, all right, I'd rather have the risk to reward than, having my stop loss all the way down here and barely getting is a 1.4 risk to reward. So I would much rather have this risk to reward, a 3-to-1, to give me a better chance of making, like I said, a higher risk to reward. So in that case, it was a loss, but when you understand the whole bias and you still see the structure, it's okay. Like, it's one of those things where the move just simply ain't ready yet. So I'm still expecting price to go bullish up until the point where if we break beneath these lows here, then this move will be invalidated. But until we break underneath these lows, I'm still looking for buys on US 30. And we can see, like, this is an impulse. This is a correction. I'm looking for a continuation. But it's just a matter of timing it, right? So ideally this week, what I'll be waiting on is kind of like a break and retest to validate that the correction is over before getting into this move, since I got stopped out last week. So that'll be what I'm overall waiting on for US 30. Hopefully that makes sense. I use a higher high, higher low indicator, but I'm unsure whether it shows correctly on lower time frames. Honestly, that indicator don't really give you the real structure. It just gives you, like, it traces price. It's not real, the real structure the way I teach y'all. We're starting to diverge now on US 30. Almost ready. I got the same downtrend on price now. Looking forward to break and retest, take buys. Yep, 100%. So that's what we're waiting on. We just gotta wait. That's all to me. What it boils down to is waiting. So, with that being said, like I mentioned, I gotta go, y'all. We've been on this call for about 2 hours. So we had a real informative session. I feel like there's a lot of great questions. We went over a lot of things on this call today. So make sure that y'all hit that like and subscribe button and help me out on my YouTube channel. And then if you feel like this information was beneficial, definitely feel free to share the channel with a friend, because obviously y'all know that we are trying to build the chart runners community and be the best trading community on YouTube, because I don't know if y'all agree, but I feel like I give a lot of beneficial information on side of my channel. So just want to share it with the world and inspire and help as many people that I can through, I wouldn't even call it the gift of gab, but just me being able to explain this market information in the way that I do. So I really appreciate y'all for sharing it with a friend. And then make sure y'all smash that like and subscribe button. So with that being said, I hope y'all all have a beautiful week. Make sure everything that we talked about on this call today, just make sure that y'all implement it. Like, remember, the word is to implement things that I teach y'all, not just learn it, but to implement it and take it and use it, right? So with that being said, y'all have a good rest of your week, and I will see y'all again. I'll let y'all know if we do another Let's Chart Sundays this following Sunday. I'll let y'all know inside the Telegram chat. So make sure that y'all inside the Telegram chat so that y'all can get those updates